tsunami. Apparently there was one of sorts. Bitcoin has been struggling a little bit, and I know VCs love Bitcoin. We're all VCs. Mt. Gox is gone. $350 million is apparently stolen and or gone. What does this mean for the Bitcoin economy movement now that the number one exchange, the number one search result, Mt. Gox, has gone under in a huge apparent fraud and or theft?
Well, it's probably not good.
So we can file it or not good.
Anyone lose money?
Yeah, let me ask this. Does anybody have, be honest, honestly appreciate it. Does anybody here own a Bitcoin? Who owns a Bitcoin in the audience? Okay, well that's not that many. That's 5%. Did anybody have even a fraction of a Bitcoin, a Satoshi at Mt. Gox? Be honest. Nobody. So nobody's impacted. It's not a big deal. Very smart. Did you have? You had money, is it? I can tell. I just look. This is just like a poker game. You are bluffing. You have money at Mt. Gox.
Like, I did a lot of magic cards.
What's that?
I did a lot of magic cards at Mt. Gox.
You had a
I had 100% of Black Lotus and Moxes, and those are all gone.
All gone.
Yeah.
So you had something at Mt. Gox.
Let's call it Mt. Gox.
No? Well, you have feelings on Bitcoin. What are your thoughts? Josh summed it up not good. What do you think?
You know, I think it's interesting, particularly as you think about recycling this backstage, about the kind of black currency market and that being several $1 trillion a year of currency that exchanges hands outside of kind of government oversight and regulation. And I think that Bitcoin can serve as an interesting experiment for that group. And for anyone that wants to buy political subscription without it showing up on the critical.
So this reinforces the idea that it's an underground currency in your mind. But we have seen increasing Horowitz and others, Chamath, Social Capital Partnership, a lot of individual VCs buying Bitcoin and then people investing in. How many Bitcoin companies do you think have been invested in at this point by VCs? Probably dozens. Dozens.
I mean, it's a great thing to speculate on, right? If you're a guy like Chamath, you want to play the market, you want to play poker. It's a great currency, a great vehicle for speculation and for generating returns. And from that perspective, it's wonderful.
And from a venture fund's perspective, I understand why you invest in the ecosystem in some way. Because on the small chance it does take off, you want to be in that and make those big bets. That's your job as a venture fund, is to take those large risks of what could be potentially game-changing companies or ideas. So to put a small stake into something around Bitcoin, not necessarily the currency itself, but into some of the different companies building around it, makes complete sense.
Okay, Josh.
Yeah, I was just saying, I think, in VC, one thing you see a lot is ideas that are directionally right but early, and so it's certainly the first one often doesn't win. I think Bitcoin's going to be like that. I think Bitcoin may have been dealt a fatal blow. I would not be surprised if Bitcoin was gone in 12 to 24 months. Cryptocurrencies, I think, will persist. And I would actually not be surprised if 5 years from now the U.S. government actually issued some sort of actual sponsored currency based on something like the Bitcoin protocol. Yeah, I would agree with that sentiment. And I think Wall Street Journal did a very good article kind of analyzing what's the point of cryptocurrency. Take the focus off of Bitcoin itself. Look back to the fact that if you're going to have a cryptocurrency, look, it's going to have to be regulated, it's going to have a degree of transparency, and it's going to have to be taxed. And to your point about the black currency trade markets that exist, most of that is about tax evasion. So, if there's going to be cryptocurrency that's going to be successful, it's going to have to address those topics.
And why has Bitcoin not plummeted today? Last night I went to bed, it was 400 and change, which certainly is less than the 1200 peak. But then I woke up this morning, it was like 500. Do you guys think that legal five twins or other speculators are continuing to buy today, almost like a backstop? What do you think is going on? Why hasn't it gone even worse? Are people holding, thinking this will right up the storm?
It's an irrational market, right? That's what you're saying, is so that people are going in and making bets, and there's no rationalization to this at this point. I mean, I think there's a a lot of analogies to the tool that didn't end well. So I think that's what we're seeing again in front of us, except it's digital is high versus flowers.
It's also really small market. I mean, transaction volume in Bitcoin is tiny. That's the thing I always point out to people about Bitcoin specifically. Well, the price has gone up. The number of transactions per day, including all the speculative trades, has been pretty flat over the last 12 months. So it doesn't take a lot to move the market, but also I think that shows you that it's not being adopted in any kind of mainstream way. But the concept, I think, is very powerful. And I think you will see digital currency advance more in the future.
What do you need to see as VCs to want to invest in a major way in this? Or as a VC, do you just say, at what point does a VC look at a space like Bitcoin 2 years ago and decide to pull the trigger? Because in some ways, is there a fear of looking stupid as a VC that you made a bet that's just in a virtual currency that really turns out to be a complete wash? How does a VC make that decision to bet on something so crazy and risky?
I mean, we invest in electric race cars and rocket ships, so we're not that afraid of being foolish. I think that's our job, is to take a bet on something big. I mean, we always tell entrepreneurs, think big. Really aim for the big ideas. The business is really driven by the ideas that are the 10 billion, 25 billion market cap companies, not by building $30, $40 million acquisitions. So we love the crazy big ideas. A lot of them fail, but when they win, man, they win huge, 1,000x.
In the history of TFJ, what was the biggest crazy bet that paid off and the biggest crazy bet that failed?
I would say probably the biggest crazy bet that paid off for us would possibly be Tesla, just in terms of if the stock's up 15% today to $30 billion. I remember at the time when we were making that investment, the idea of going after the auto industry just seemed absolutely crazy and silly. And you look at it today, it's the most popular best-selling car in its broad category. And they're talking about building the Gigafactory and all this. And, it looks like it's going to be one of the more successful companies in the last decade. In terms of the craziest thing, God, there's a long list. I'll give you one that actually we don't know if we're right or wrong yet, but it's pretty crazy, which is a quantum computer. So literally using quantum spin to do calculations. So we always joke, you can't look at the computer, otherwise you'll break it. It's like, it uses superposition. It's like it's 1 and 0, and then you look at it, and it somehow works its magic. So we'll see if that we're 10 years into that one. It looks promising, but it's pretty crazy.
How much have you invested in quantum computing over what period?
So we probably put $10 or $15 million in that company, but they've raised quite a bit. Actually, they sold their first unit to Google for about $10 million. There's some government agencies that have some. So they've actually sold a number of the systems, so it seems to be working. They're up to, I believe, 256 qubits, they call it. So the equivalent of a 1-0 bit.
Jay, some of the big hits or misses?
One of the crazy ones was definitely Fabulous. Facebook for Game It. Obviously, it's turned into Fab, which we're pretty happy about.
You missed that completely.
No, we're in it.
You're in it?
Oh, yeah.
So you bet on Fabulous, you moved into Fab.
Yes. So that turned out, the bet on Fabulous, and in a lot of ways the bet on Fab, we were crazy about. Another online flash sale site at the time.
What do you do when the entrepreneur comes to you and says, I created this gorgeous gay social network that people love. I'm shutting it down and I'm going to pivot it to a flash sale site in the era of people believing that flash sales were dead?
We back entrepreneurs, and Jason and Bradford are entrepreneurs, and we felt that they were willing to give up on what they had built, and they saw an opportunity in this market. We would not only move our investment over, but double down at the time. That's what we did, and I believe what every investor did around the table. So we were all given the option pretty much to pull out or to stay in or put more money in, and pretty much everyone doubled down. So that was probably the biggest one.
Was that part of the team of people or the idea?
We were back in the team. We're really early stage. For us, it's 90% team, 7% market, 3% product, essentially. So it's all team. In regards to the one that we've made some bets on the aviation industry, which which have been pretty crazy that haven't worked out.
What type of companies?
Just different ways to bring private travel to the masses.
Like blackjack?
We've been in a few different ones around the space. Yeah, that's been a challenge. I still really believe in it, but there are a lot of challenges there. Someone is going to figure out how to make travel more enjoyable, though I don't necessarily agree that the problem with travel is the flight. I think a lot of it is the airport and figuring out how to make airports more enjoyable, quicker, more accessible. And we're seeing investment by our country in airports and things like TSA pre-check. If you don't have it, don't get it because I don't want the line to get any longer. But it is awesome. When I say it's awesome, it's what traveling was before September 11th. It's what it comes down to. So I think, we're trying to figure out ways to make air travel more enjoyable, and those are some crazy events.
Were you an investor in Surfair?
I'm not in Surfair.
What do you think of Surfair?
I commend anyone trying to figure out this space because it is not easy, but it is needed, and travel sucks right now. So.
Has anybody here tried Surfair? Or did anybody look at it as an investment?
No.
DFJ didn't even look at it?
I know, you'd think it'd be right up our alley.
I would think, I actually, for people who don't know what it is, I think it's like $1,400 a month.
Yeah.
And you can fly unlimited between San Francisco, Santa Barbara, Los Angeles, and maybe soon Tahoe and Vegas. And I took it as, you go to a private aviation terminal, you walk in and you just get on a 6-seat private Pilatus jet, your turboprop, and you save an hour each way from being in the airport. I don't know if it's going to work or not, but it's pretty delightful.
You have to get economies in each market. That's the challenge, right? In order to launch an airline, the challenge becomes you have to have enough passengers in each market to make it economical and make it work. So that's what some of these companies have to face, and that's why they're starting market-based.
And you also have regulation, which obviously Bitcoin faces, Uber faces. Has Uber's successfully challenging and Airbnb successfully challenging regulators changed how VCs look at markets today?
Absolutely.
How so?
I mean, I think it gives conviction to VCs that will often be pessimistic about how a regulator may view a business like that. It gives us conviction that change is possible, and that even sort of in times of difficulty, that the company will prevail because the user base, the people that actually use the product and engage with it, will sort of force their hand.
I mean, I think you're seeing government being more responsive to people too. I mean, the thing about a service like Uber, and I give them so much credit for how they've pushed up against the regulators. There's so many people that want them to succeed that it makes government so instantly unpopular. You've seen that backlash, and I think they've shown. I mean, if I'm the new government, I'm thinking about trying to stop Uber. I look at the examples of the other cities that have tried to do that and folded, and I think they're going to have a much easier road forward as a result. So it's this kind of like ask forgiveness, not permission sort of attitude, and you can push that too far. But I think they've really walked that line. I completely admire what they've done there.
I was going to say that I think it comes back to the crux of the issue. Why is the government there? I mean, if you think about it from a public health, safety, and welfare approach, I mean, the reason why in Uber's case in Seattle, the Seattle government kind of was going to push back on Uber's implementation. But to your point, the backlash from the user base came back up and surfaced a dialogue to say, why are you concerned to begin with? It should be about safety in transport, so let's make sure that the rides are safe, that the drivers don't have criminal records, etc. You could argue the same thing back to Bitcoin. Again, the government should be there from a public health and safety welfare. It shouldn't be there to regulate the market per se. Allow the innovation to come in and really kind of change the dynamics of the ecosystem.
And we see this a number of times now. It almost feels like a functional, responsive government. Marijuana laws changing based on the will of the people. Airbnb being allowed based on the will of the people. Uber being allowed based on the will of the people. The will of the people seems to actually be in some way functioning. TSA even responding and doing TSA pre, and the use of electronic devices on planes based on the will of the people. I mean, that was a 10-year battle. Actually, Nick Bilton from the New York Times seems to have pushed it a little bit. There's definitely a cultural change in America now to maybe embrace change.
Well, maybe tying it back to Bitcoin, I think we have an investment in Redfin, real estate, very regulated industry. There were a lot of obstacles that they had to overcome early on, but I think they've won over region by region as they show that they are a responsible actor, and they're actually providing a better consumer experience within kind of the safety, so no one's getting taken advantage of.
Explain for a second for the audience who doesn't know, how does Redfin operate, and why are real estate brokers so absolutely pissed off about it?
Well, sure. So I'd say it's the incentives in real estate are really strange in the traditional real estate business. So if you're buying a house, your broker who's advising you gets paid a percentage of the price you pay. So they have a high incentive for you to pay more. That's kind of odd when you're the buyer and they're your counsel. So that would be one basic example. This is also typically the largest purchase that most people are going to make, the biggest financial decision. And you're dealing with people who do it, multiple times a week or a month, and you do it every 5 or 6 years, maybe every 10 years. So there's a huge information asymmetry. Redfin is trying to absolutely obliterate that by doing two things. The one is giving technology and tools that educate the buyer that show everything that's going on, all the houses that have listed, giving them actual data to support, we think you should bid this much. But more importantly, the agents work for Redfin, and instead of working on commission, they're paid on customer satisfaction. Right? So the broker truly wants you to be happy, wants you to get the right house, not to have you pay more. The key thing is that was a new model. A lot of laws and regulations in real estate exist to protect the consumer. Once Redfin was able to show people that the consumers were still protected, all of that kind of opened up. In the same way with Uber, I think people are saying Uber is a responsible company. They do take safety seriously. They are being responsive. So I think once the regulators get comfort with that, it's very hard to stand on laws which, while they maybe were first put in place for safety, ended up just protecting an established class and protecting margins. So I think government is responsive as long as you can show them that you are delivering a better consumer experience.
One of the things we talked about yesterday on the Angel panel was, gosh, it's super easy relative to history, not to an individual's experience, to raise an angel round. I don't think anybody would disagree. It's never been so easy to raise an angel round, with the exception of a maybe 3-month period during the dot-com boom, when they just had buckets of money, buy the coffee for people to take. But the big problem seems to be raising an A round, and the problem seems to be you guys. You don't scale. You can only be on 8 boards. Therefore, your dance card gets filled up. I mean, how do we, as an industry, deal with this? Because it doesn't seem like we're adding a ton of VCs or VC funds. So how do we solve this Series A crunch, or just, you don't have any more board seats left?
I'm not sure that there's necessarily more fundable companies that are out there per se either. There is a lot of innovation, but there's a lot of noise as well, because we have so many young startups that are coming out of the accelerator and incubator system. If it's truly fundable, then the market will fill the need, right? I mean, there will be more VCs that will pop up and will invest in those companies if you can show the returns. The big challenge right now is that as you look at the companies that are trying to come in and pitch, while they may think that they have the greatest, next widget or next, technology that's going to change the world, folks here are seeing lots of companies that are coming and making those same pitches, and you have to really be able to stand head and shoulders above those things and come back and make an investment that's going to
Do you guys agree with that? Do you think there's just the same amount of deserving companies, or has the benchmark for what's deserving gone up?
I think the benchmark for what's deserving continues to rise. Yes. But I think one thing that's interesting is that I think it was Mark Andreessen who said kind of both these data points, which he just kind of pulled out of his ear, arguably. But one was that about every 10 years, a great company is a truly outstanding company is created. There's actually a fair amount of data that shows that's true. But the other data point is that there's about 10 really awesome companies that are created every year, or that are financed every year. And the interesting thing I was thinking about that is that may have been true when the internet was 50 million people or 100 million people, kind of the first dot-com boom. Now the internet's about 2 billion people on its way to 7 billion. What's our ability to absorb new applications, new companies, new technologies? Theoretically, that has to rise at some rate similar to the number of people on the internet at the same time. So theoretically, the number of great companies should also rise with it. But I think as I sit here today, looking back 15 years ago, I was around the first dot-com boom and have the gray hair to prove it. The number of companies, at least that we see being financed, still is about that kind of 10 a year number that are really kind of great breakout businesses.
What do you guys think?
I think it's an evolutionary algorithm. I think that, the survival of the fittest. I think companies that are solid companies are absolutely getting funded very competitive deals. I think if you look at times where lots of money has come into the ecosystem, it's like putting too much food into an environment, right? You don't have that evolutionary pressure for the selection that makes the organisms hardy as a result. So I actually think that the relative scarcity of capital is actually a positive forcing function that gives a discipline to companies that makes them tougher and more resilient as a result.
Well, certainly it makes them more resilient, but what if, instead of 10 companies that could become multi-billion-dollar companies a year, there are actually 30? I mean, it is possible that now with mobile, we actually have 30 that should have survived, but the 10 strongest killed off those, 2 or 3 of those other ones who couldn't get to the food first, but who would have been a great species.
No, I think that's a real risk, but I also think if I would say the capital ecosystem is as developed today as it ever has been. So if you look at, it's not just angels that can write a $50,000 check. Guys like yourself with an AngelList syndicate can write, how big's your syndicate now?
Syndicate is worth $1 million and change.
$1 million and change, right? So, you can write a $1 million check like that.
I'll probably wind up being $500,000, but yeah.
Okay, or $500,000, right? I mean, that's a new thing in the ecosystem. That creates yet another bridge for developing those companies. So I think there's always some risk that, great idea is going to die just for lack of funding. But I'll tell you that the companies that are breaking out right now are having multiple offers. I mean, it's an incredibly competitive market.
Well, I think if you look at the ecosystems around the world, get out of just the U.S. and Silicon Valley. The level of activity we see in China, by way of example, or in Israel. I mean, great companies there are getting funded, right? The number of VCs in China, honestly, dwarfs the number of VCs in the Valley. Shockingly, I didn't know that until I was over in Beijing and sat down with the IDG and Cell team to tell me how many VCs are in China. So they are filling the market demand. There is a lot more noise. To your point, there certainly will be more companies that come out. But it doesn't mean there still won't be a hurdle, and I agree with you, the hurdle is getting higher for people to jump over to be a fundable company.
I also think you'll see, guys, like what we're doing is we're raising a fund to do more Series A. So traditionally we've done more seed, and what we've seen is more investors come into seed. We feel we're in a position that we can start doing more Series A. So I think it takes time for it to catch up. I mean, the interesting thing about what we say is, we can't win because we're too busy to write more checks, and then when times are bad, well, why aren't you writing more checks? So it's like, and not everyone's always going to fund it, and not everyone's always going to be happy, and that's just kind of how this business goes, unfortunately.
Let's talk about where we are in this boom cycle, because everybody here has been through the first one. Who was an investor during the first one, and who was on the other side of the table? You were an investor during what was on the other side of the table? Other side of the table? Both.
Other side.
Other side. Entrepreneur, right? So the boom now obviously feels much more sustainable. Are you guys in any way worried we're getting ahead of ourselves, or that there's going to be an event? Because it does feel like the WhatsApp was a unique moment. Snapchat feels like a unique moment. But are they justified or not? Let's take each one.
Snapchat did, right? When you heard Snapchat at $3 billion, that felt like, wow, that's a lot for such youngsters. And then WhatsApp happens, and it's like a complete frame change. I mean, it makes Snapchat look downright reasonable in comparison, right? I mean, for me, WhatsApp was just a complete frame-shifting moment. I think the way that I look at that is, I think of it as a relative basis. So I think a company like a Facebook will look at a WhatsApp and they'll say, is it worth 10% of me, whatever that number is, for this asset? And they came up with the answer being yes. But it's much more than sort of built up from the ground up on, any kind of financial metrics. I don't think they're running the model on what the discounted cash flows are in year 20. I actually think that's one of the reasons why Facebook is so dominant right now in companies like that, because they have that nimble thinking and they're willing to make those big bets. Not to knock your parent firm, but I think this would be a weakness of Microsoft traditionally, which is they would never be able to get past the spreadsheet and say, well, okay, so if I'm paying $19 billion, it's got to have $1 billion of free cash flow in year 6, right? So I actually think that this is one of the reasons that at boom time you're seeing those companies win.
Well, let's give you a chance, James, to talk about that. You did buy Stein for a couple of $1 billion. You bought Razorfish AWA for a couple of $1 billion. One of those worked out, one of them didn't work out so well. What is Microsoft's strategy in terms of big bets? Do you think what Josh is saying is true? You're at a disadvantage because Microsoft traditionally has to really justify this to their shareholders, whereas Zuckerberg has complete control over the cap table and the company. You don't. Are you going to be able to compete in this new world of the God King CEO?
Look, I think it remains to be seen to see what types of big bets Microsoft will make going forward from a corp dev standpoint in terms of acquisitions. But I think, coming back to the WhatsApp example, I think you're spot on. I think Facebook, if there's any company that's out there that can take advantage of it and make a great value and actually get a return, it's going to be Facebook for the WhatsApp acquisition. You can contrast that with what we paid for Skype on a per user basis. They actually paid less for WhatsApp on a per user basis. Jim Getz over at Sequoia did a pretty good analysis on this, also even comparing what Google paid for YouTube. I think there's going to be some, I think at the end of the day, WhatsApp is actually going to probably prove to be a good return for Facebook. So, but other companies not limited just to ourselves are also going to be in a position of having to operate in this new ecosystem and ask ourselves, what are we willing to pay? How do we value and monetize these users? And it's a big question.
So let's talk about Microsoft Ventures as a whole.
Yep.
How big is Microsoft Ventures? How often are you investing? How many partners? Give us the broad strokes.
So we have about 24 folks around the world, and we're much more focused on early stage. We're not out making late stage investments. We have a variety of things, both from partnerships with folks like Techstars and 500. We have a series of accelerators around the world where we actually operate those accelerators in a way it's a non-equity model. So we have the top accelerators in China, Israel, Bangalore, London, Paris, and Berlin. And so, those ecosystems have actually proved to be very fruitful for us. And then from a seed fund standpoint, we've made, I think, 6 investments in the last 6 months. We made 5 last year. So we've been pretty active. And, the value of those investments, has actually proved quite valuable for us in terms of us being able to go and influence and work with the entrepreneurs. So, how that evolves and our ability to be able to help those companies grow will actually be measured on how we can help them drive customers and revenue for their businesses, because frankly we want to invest in entrepreneurs.
And mainly a bent on enterprise, or is it enterprise and consumer? Because this is the big debate of the year. You got a new CEO. Is Microsoft going to lean into enterprise and sort of say, hey, let's leave the consumer battle to others? What's your take on that?
Well, we will certainly follow Satya's lead. I mean, Satya has not come out to talk yet about kind of that direction. In the past, if you look over the past year, it was a bit of both. We did some enterprise and we did some consumer.
What's the average check size?
Well, we invest off the balance sheet, so we're not writing huge checks that are going into taking the entire round, because we have to be cautious.
250, 500?
Well, we have to be cautious about not having to absorb and report their financials. This is the whole kind of accounting rule. So if we're obviously going in on a small round that's a seed round, we're only going to be a fraction of that round. We're not going to take more than 10% of the round.
Okay, so $1.5 million rounds, you might do 150 or something.
Yeah.
And what impact has Google Ventures had on Microsoft Ventures? They seem to be, frankly, a little bold, if not crazy in their approach. I mean, it seems like an open book, go wild from Larry Page kind of approach. How do you guys view Google Ventures?
Frankly, I have a ton of respect for what Wesley and Rich and the team over there have built. We actually talked with their team quite a bit. Not unlike when you talk to Intel, they're often are co-investing with AMD or with Qualcomm and on deals. So it's not uncommon for us to be sharing deal flow with them and with Amazon, to be very candid.
What do you think, Jonathan? Should entrepreneurs be meeting with the Microsofts, Facebooks, Googles of the world early on, or do you advise that Northridge, no, stay away, give us all the equity?
We like great partners that like to stay with the company and actually help. So as long as they're willing to do both of those things, they're great partners for us and great partners for founders.
Do you think corporations have been long-term, though, as venture partners? This is a big 20-year view.
It's a good question. Speaking as someone who was a corporate venture guy in a previous life, I started a corporate fund for Level Crossing, which is a large telecom company that's now for Level 3. It was a couple-year endeavor for us, and then we gave up on it and changed directions. So I have seen corporations kind of give up on venture investing, or get in when it's popular and get out when it's not.
What do you think, Josh J? Is this a good idea for young startups or A-round companies to be meeting with the Googles, or do you think Google might be a dangerous thing for people to consider because, gosh, they're going to steal my idea, or they're going to be looking at the technology. I mean, that is the number one fear, right?
I think that it all depends on who you're meeting with there and the relationship you have. I mean, Google is people at the end of the day. Microsoft is people. So it really depends on the trust you have and who your partner is, and if you take an investment from them, and how involved they're going to be and how big of a proponent they're going to be. So I think it's unfair to just like blanket the company's name, and more about understand who you're working with there and your comfort level with them.
What impact has Google had? I mean, it's been quite a ramp up. They have dozens of partners, like Microsoft dozens. Do they have more than DFJ? And are you battling with them now for deals?
No, I'd say it's very collaborative with them. I think Google as a company, what they're willing to do with their balance sheet is frankly inspiring. And I think it should be a model for other public companies. Instead of having $20 billion in treasury bonds that they're managing for yield, I mean, those guys are doing all kinds of crazy stuff, whether they're taking over Moffett Field and rebuilding the hangars, self-driving cars, or literal moonshots, Project Loon that Mike Cassidy's leading, right? Wireless internet from balloons. I just think that as a shareholder, I find that very inspiring. I think with the structure of Facebook and Google and a corporate structure, what every entrepreneur should be looking for, especially at the early stage, is a long-term investor. DFJ, we look at it as a 10-year plus kind of time frame. Our funds are structured to allow us to do that. We have 30-year history of doing that. I think the biggest problem with corporate VC has been a 2 or 3 year stint in a corporation is a long stint, and so people turn over really fast. So over a 10-year span, you might be working with 5 or 6 different people. You get a new CEO, maybe all new bets are off. I don't think that's a problem at Google. I don't think Larry's going anywhere.
I'm torn between talking about valuations right now or just the amount of fashion in venture capital's industry. And I don't know if you guys noticed, but I mean, look at the shoes, Josh. Amazing. And then the power jacket. I've been noticing that VCs are getting quite stylish these days. What's up with that?
You gotta roll out the red carpet to compete. It's all about wooing founders.
I found my suit. You had the great suit last year. I was expecting you to.
I went jeans this year. I was a little maybe too formal last year. Trying to keep it a little bit grungy. But the entrepreneurs are getting younger. Is it harder to relate to this younger generation, or the VCs today having to change their style a little bit when they're dealing with not 25? We went from 30-year-old MBAs in the 90s to 25-year-olds, in the 2000s, and now we're dealing with 19, 20, 21-year-olds. Not uncommon, correct?
Yeah, I mean, the thing, we love young entrepreneurs. So of our biggest hits, it's been almost exclusively entrepreneurs that founded the company in their 20s. We were actually just talking about this yesterday. I think part of it is to create a really big company, you have to be kind of unreasonable in some dimension, right? I mean, you have to not accept the common wisdom. So many people are going to tell you you're wrong. By definition, you're doing something that sort of goes against the grain. And I think that, that's one of the benefits of youth, right? Is that you haven't been sort of conformed into the reality of what the world is. You don't know, this is the way something is done. You're willing to chuck it all, some wild idea. So we love that. So, for us, it's less about the way we dress, and it's more about what we try to let the entrepreneur know is we want unreasonable people. We want you to be crazy. We're here for you to be crazy. In fact, if you ever start to get reasonable, that's when we're going to be worried. Because we want the entrepreneurs who are willing to not sell at $100 million or sell at $1 billion, but who are going to build a 10 or a 20 or $25 billion company.
And how do you
It's passion, and part of that's a reverence too, right? So being willing to discard what everyone else is doing.
Ignorance can be bliss for startups.
not knowing exactly how much work it's going to take, not knowing exactly what the reasonable behavior is? How do you deal with the fact that it's the unreasonable ones who get stuff done? It can be uncomfortable sometimes to work with these founders. How do you manage that relationship?
You don't manage it. I mean, that part of it is knowing what our role is, which is our role is not to manage entrepreneurs or CEOs. Our role is to support them, to give them advice, and I look at it sometimes as making sure they sort of stay on the rails, like keep them solid while they're pursuing their vision. But largely, we want to get out of the way and let them do their thing. So I think that's part. I think where you've see some VCs or some firms be less successful is when they get confused on that point and they try to become like the boss of the CEO.
If you give them enough rope, they'll either make it a lasso or hang themselves. That's really what it comes down to. Is we got to give them room to run, and hopefully they're successful. And where we can give guidance from what we've learned, great. At the end of the day, this is their company. They've got to run it and build it.
sell shares early now, and often you advising companies to set up secondary markets early and engage in them. Rich, what do you think?
Not something we have a ton of exposure to, honestly.
You don't have
as a firm.
I think it's an essential part of the angel ecosystem. So I think the angels are getting in the earliest, and I think their willingness to sell in a secondary, which allows them to recycle the capital, is a good thing for the overall market. I also think that you're seeing companies go bigger now. So if a company like Facebook would be the extreme example, right? It stayed private until it was worth many, many tens of billions. I think it's important to allow entrepreneurs and their teams to take out some liquidity along the way if you're going to go that big. From our perspective as VC firms, I can count on maybe one hand the number of times we sold on secondaries, and it's always been at the request of a company where it's been, hey, to make a round work, we need you to sell a little bit. Because we're always, our risk tolerance is bigger than any individual because we have a portfolio approach. And so for us, it's about the magnitude of the wins.
When we look at Joshua,
So I was just going to add to that. Josh's point is interesting about VCs selling on the secondary market versus individuals or founders. Because I think as we've all heard in the press, there have been some very high-priced, very large rounds that happened recently, hundreds of millions of dollars going into businesses. And that's a lot of that room has been created by the earlier investors, not just the angels and the founders, selling on the secondary market and selling to those secondary investors, selling their shares to a later investor, creating a secondary transaction base.
talk about the IPO markets. I know Box is one of your major ones. Got a lot of Dropbox, I guess, is going to be going public. A lot of activity there. How long does this IPO window stay open? What do you think we can expect? And what do you think of the reaction to public stocks so far? It seems like we haven't had things run away too crazy, except maybe some people speculate Tesla is pretty robust in its valuation. Twitter was a little robust. What do you guys think of the public market's reaction to these tech stocks?
I think valuations are always about what people are expecting for the future, and I think right now you're seeing a broad optimism about the future, and that's contributing to high valuations. I think things that could, so we're in a great IPO market right now. The things that could change that would be some sort of big macro shock, some kind of event or financial crisis. And it can also be, I think, when bankers and when companies become disrespectful of the process, and you frankly have just bad companies go out, and when you burn the public investors, that's when you close the window. And I think it's incumbent on all of us within the ecosystem. I hope we've learned the lessons from the bubble. I mean, you had companies that just made no sense. There's made no sense in those companies at all. I think now you can say companies might be valued more highly than they should be, but they're real companies that are going out. I mean, typical IPO is going to have 80, 150 million in revenue, have been in operation for 6-7 years at least.
Anybody nervous about the IPO market, or just feels solid, no duds going out, real revenue?
That's the difference between this time around and last time. These companies are going public with revenues and real companies. So as long as that continues, we should be okay.
As long as it continues and as long as the companies can continue executing once they're public, I think when if a company has a bad quarter, either in terms of user growth or revenue, they're going to dig for it pretty heavily and then have to really claw their way back out of that hole again.
We've probably also are benefiting from the fact that we've had, go back, to this recession recently. We had several companies who had to survive through that experience, and so we're seeing the strong fish that survived out of that.
In 2008, 2009
Exactly.
financial crisis.
So, to be in the position where right now, I think it reflects the fact that we have some pretty solid companies that are coming out with sustained revenues and obviously are showing sustained value in the markets. So whether or not that will turn down at some point remains to be seen.
What do you think about Americans' competitiveness today? It was 10 years ago, we kind of got the sense that, hey, other markets are going to play a pretty big role. In fact, we don't actually see great internet companies coming out of any other location other than China right now, in general, sometimes Japan. Korea once in a while.
Israel. Yeah, Israel.
Once in a while, Israel's good.
Yeah, it's fantastic.
Yeah. We still seem to be dominant in this country, even though we're still such a small percentage of population. What do we attribute America's continued dominance in this technology space to?
Well, let's be clear, it's not all Americans.
Yeah, that's true.
If you look at a lot of the companies that are, I think the statistic is that 7 years in a $1 billion company every month. If you look at a lot of these companies, shoot, many of them are actually international folks who've actually moved here to the Valley because this is where the capital was available, where talent was available, right? So just because they've, might be based in America doesn't necessarily mean it's an American company per se.
It's an American company run by an immigrant.
Yeah, actually, it's a great point. It's not Americans as a people. I think it's the American system.
Yes.
Right? And I'd say you've got a very robust capital ecosystem. You have a tremendous amount of resources available to people starting companies, especially tech companies. But you also have a culture where risk-taking is celebrated, where failure is accepted. In a lot of parts of the world, if you start a business and you fail, your life is effectively ruined.
I mean, people do kill themselves in other countries.
Well, yeah, I mean, and it goes to things like, you can't escape your debts, right? Like you can't declare bankruptcy, and walk away from your debts. I mean, if you raise $3 million from angels here, we expect that you're going to give it, 2-3 years of hard effort. But if at the end of the day it's a zero, everybody accepts that, you move on and you go start your next company. I would say most, if not all, of the great entrepreneurs had some failure along the way. That's a normal part of the life here. That is not the case in the rest of the world.
And I think to expect the rest of the world to be there so quickly is unreasonable, right? And that this country's been founded on entrepreneurship, and it's part of our DNA, and we have the systems in place to think that we can snap our fingers and recreate what we've done in America around the world, and is not realistic. Now, 20, 30, 50, 100 years from now, that could be very different.
I think it'll be a lot sooner than that, simply because of the fact that, folks, there are so many mobile phones in our hands of everybody around the world. Governments are looking for opportunities to figure out, hey, how do we recharge our system? How do we democratize Silicon Valley? Because innovation, again, is not limited to the borders of the United States. It is going to happen elsewhere. But a big part of that is getting back to the ecosystems that are actually structured in a way that are going to make it valuable for the entrepreneur. So like when we look at deals in India, by way of example, it's not uncommon to see angels taking 60 or 70% of the round, in which case you're saying, look, that's an unfundable deal. We're not going to go into that deal because you've set the entrepreneur up for failure.
And how's the entrepreneur going to be motivated to come to work?
They're not. Exactly. So you have firms like DFJ, MJ on their team, who is actually actively engaged in India, who we're working with, and we're trying to go in and actually educate that market and start showcasing some deals and saying, hey, look, if we do an angel deal round, here's how much percentage we're going to take for you to make it worthwhile for the entrepreneur, and to get DFJ to come in and follow in on the deal. Because otherwise,
So rebooting the cap table, basically saying, listen, I set this up wrong. You're going to lose a bunch of your equity, but it's going to be good for you long term.
Long term, that's correct.
We do see what's happening in the Scandinavian countries, Supercell, Minecraft, King. It's almost like they figured out some there's something in the water over there or something.
Yeah, it's nothing against those companies. I do think that if you look at what's happening, look at those companies, one thing is they don't tend to employ a lot of people, and I wouldn't say they're solving kind of the big meta challenges that we have in the world. One thing that I'd like to see us as an industry continue to push on, and not to sort of worship at the altar of Elon Musk. If you look at what he's done going after space exploration, clean energy with Solar City, Tesla, right? Tesla and Solar City collectively employ more than 10,000 people in great jobs. They're solving real deep problems and building real value. That's the one thing I worry about when I look at the current ecosystems. I see us drifting a little bit into things that are maybe frivolous as opposed to solving those big problems.
Yes.
And I hope that America continue. I think what made America great were those fundamental technical innovations, and I hope we continue to do stuff like that. Elon, to your point, great example. Not a first-generation immigrant himself, like not born here, but someone who has thrived within the American system.
All right, on that note, let me thank an incredible panel, James, Jay, Josh, and Jonathan. Big round of applause for giving us so much great information. And we're going to do a quick stage change and stick with us. Well done, well done. Thanks. Awesome jacket. Amazing shoes. It's a power shirt.